And thanks for staying with us here on your election headquarters, the Joy News channel. It is, of course, quite a very interesting development in Parliament there, where we're seeing the leader of the minority side, Alexander Penyumaking, there on the floor of the House, admitting that it is late. Yes, indeed, it is late, but the committee had to table Report 10, which included the name of the Ningo Pram MP, Sam George, who has now been approved despite the setback from the minority side. They've decided to let it slide with a majority decision. Obviously, looking at the numbers there on the floor of the House, it goes without saying that if there's going to be a secret ballot, that will definitely go in the favor of the majority side. For now, the minority wants to appeal to the Speaker. So the 11th report, which includes yet another interesting name, the Minister for Foreign Affairs nominee, Samuel Okudzeto-Ablakwa, they want that report taking tomorrow due to the time constraints. It's unclear what the Speaker will direct now, but it appears that in terms of the decision, going by the numbers, the NDC does have more numbers than the minority side on the floor there, and we'll be keeping our eyes on the developments as they happen and bring you up to speed with what's been happening on the floor of the House. But there's PM Express on the Joy News channel as well. And don't forget that tonight our focus is on yet another interesting policy, the gold for oil policy. As we understand, the Minister for Energy was just some days back a nominee, has now been approved, and he's giving a hint of what may happen to this policy already. This is the quote from the man who's walking into the job for the first day. And of course, we have a sense of what might happen in the coming days as far as John Jinapor is concerned and his leadership at the Ministry of Energy. Take a look at what he's been saying on day one of office. He's saying that, quote, the Minister of Finance is already working on the gold aspects of the gold for oil policy, and it intends to set up a gold board, which we've heard about. The Finance Minister has indeed launched the committee. But he goes on to say, quote, we are reviewing the gold for oil policy. If you see something being done, it's just an interim arrangement. But many of you are wondering what the background to this whole gold for oil policy is, dating back to 2022. Of course, we knew that there was a significant fiscal challenge for government. Internal reserves had depleted completely, a reason for which the Akufo-Addo administration under the leadership of Dr. Mahmoud Bawumia then brought up this innovative idea of a barter trading system. So gold, natural mineral resource, one of our highest export earners, will then be replacing oil as we bring them into the country. So the main objectives you find here: increasing gross international, reserves that we have. We had the depreciation challenge that the cedi was facing at the time, a reason for which that policy was introduced. Then you have the issue about reducing the fuel prices at the pumps. All of these are still a reality staring the NDC administration in the face, a reason for which this policy will be crucial in the next few days for the John Mahama NDC administration in terms of managing the cedi and dealing with the fuel prices. I'll tell you why. Look at the entire mechanism of how the gold for oil policy works and what's been happening over the last 3 or 4 years, if you want to describe it as such. The Bank of Ghana does a domestic purchase program. They get the gold bars in cedis. Definitely in terms of exports, it's going to be a forex earner. So the BOG then moves into the international market, brings in forex, has hard cash, and the dollars are now used to purchase fuel products. And the boss, as we know it, receives it. And then you at home then get your fuel without any headaches at all. And it's part of the ways of the S1 administration. There are mechanisms in terms of bypassing what it is that we're talking about in terms of the implications on fuel prices and the cedi as well. But take a look at this. We were having a significant challenge with the exchange rate at the time. And when that policy was introduced, you can take a look at the line graph here, giving you a sense of what happened ever since the introduction in 2022. We're peaking significantly in terms of the dollar rate being somewhere around 13.07. Then immediately the program was introduced, it shut down, and relatively the cedi has been performing quite creditably in terms of a marginal rate where we are, of course, just heading into the range of 15. So that's a sense of why this policy would be very crucial for the NDC administration as well. And we'll get into the details as to what the review implications will be. But here are the key economic indicators, just to give you a sense of how technically or tangibly that policy has impacted the economy. Reserves have shot up. Now we're somewhere around $8.9 billion. We're nowhere near this in 2022 because then we're in need of fiscal support, a reason for which now we're seeing some level of appreciation. And of course, then the depreciation rate of the cedi was then at 19.2. And if you take a look at what's happening now to the cedi, ever since the introduction of the gold for oil policy, then you can say indeed that there is some significant progress. But what will the review entail? We'll find out from the minister shortly. But take a look at this, and let me take you through this process as well, because the gold for oil program as well was significant. This is the amount spent on the project itself, 2.43 billion. Take a very keen interest in this figure, because this stark reality will give you a sense of what's happening. BOST then has made profits in terms of its sales of the fuel through the gold for oil policy in excess of 8 billion Ghana cedis. So if we're spending 2.43 billion on the fuel products and you're selling far in excess of 8 billion, this gives you a typical idea that that might be a working policy. As to whether or not it's transparent or otherwise, in terms of the nominal figures, you see a stark reality here of some profits being made. But then if you look at the entire average in terms of the amount that we need monthly to deal with this oil supplies that myself, yourself will need as a country, this is the figure we're talking about, in excess of 300 million United States dollars. But the bigger picture that you need to be mindful of is that there are transparency concerns. And that's why the review as well is coming into sharp focus and perspective as to what government intends to do. Here's the, Auditor General's comments clearly on the gold for oil policy. And part of it says that, quote, we were not provided with a formal agreement between the Bank of Ghana, PMMC, the Precious Mineral Marketing Company, for these transactions. As a result, we could not confirm the salient terms of the agreement and the engagements, including the fees, commissions paid to the Precious Marketing Company, and what they got for their services, unquote. So clearly there are, transparency issues here. Who was the beneficiary? Who was the intermediary company running the intermediary company that made some commissions on the sales that were done? Because mind you, the country is losing a significant amount of some $2 billion already to illegal smuggling of gold. So if you are running a barter system where there's no transparency, obviously there are a number of questions to be answered. And that's why still in the Auditor General's report on the gold for oil program, you see that there's a clear case of the country not even having a dedicated offshore bank account to run the program. So we are not able to track the inflows or outflows as far as the gold for oil policy is concerned. And that's why tonight we're asking the question as to what will be entailed in that review of the Ministry of Energy as it reviews the gold for oil policy. And partly, we're also concerned about the implications on you as the average consumer of petroleum. We're doing this tonight here on PM Express with me, Blessed Sugan, be my guest. We speak to the minister and other stakeholders' concerns. This is the Joy News channel. We'll be back. And thanks for staying with us here on the Joy News channel. I am Blessed Sugan. This is PM Express. And as I indicated earlier, we're talking about the gold for oil policy with a clear roadmap coming through now from government on what the future holds for the program. The Minister for Energy today announced on the first day of his working period, announced to the country that he will be reviewing the policy. So what's the implication for the average consumer? Joining us to help with the discussion is the Minister himself, Dr. John Abdullahi Jinapor, who's Energy Minister. Duncan Amoy is the Executive Secretary for the Chamber of Petroleum Consumers, Ghana. And Dr. Riverson Opong is the CEO and also industry coordinator for the Association of Oil Marketing Companies. They were there today interacting with the minister. I will hear from them shortly. And Samuel Bekwe is a member of the civil society groups and their coalition working in the extractive sector. Don't forget that PM Express, as always, is brought to you by Syntex Tank. We also have the Pepsodent Cavity Fighter and Academic Times Journal. They're supporting us for tonight. It's a good time to bring in the Minister responsible for Energy, Dr. John Abdullahi Jinapor, who's joining us on the show. Good evening to you, sir, and thank you for spending some time with us here on PM Express. your first day at work, and you're already giving us a sense of what might happen in the next few days. What's likely to happen to the gold for oil policy in terms of the review that you're announcing?
Oh. Hello?
Hello, sir. I hope you can hear me.
Yes, I can hear you now.
Apologies there. I was just pointing out to, first of all, congratulations to you because you're assuming position as the minister responsible for energy. And on day one, you're giving us a sense of what you are likely to be doing. And that includes a review of the gold for oil policy. We'll talk about the other announcements you made today. But give us a sense of what's likely to happen to the policy in terms of the review that you're talking about.
Well, we're not doing it alone as a Ministry of Energy. We are doing it in collaboration with the Ministry of Finance. We find it a bit more opaque. It's very difficult to get exactly what the previous government was doing, and depending on who you talk to, the explanation is quite inconsistent. And so the Ministry of Finance has indicated that they want to establish a gold board responsible for procuring all the domestic gold. We have a foothold of exactly what is procured, how much accrues from that in terms of the forest. It is put in a dedicated account, and then they can use that to support the oil imports that the country is engaged in. Both is a critical and important player in the industry. And they want to bring about some clarity in terms of their job, their function, and what they do, and also encourage the private sector to also get involved in this whole industry of securing finished products for the nation. And so that is exactly what we are looking at, to bring about clarity, to bring about a high level of efficiency, to bring about a reduction to the barest minimum in terms of the opacity of this whole growth for oil. And so we would not continue as usual. That is a fact.
At least the nominal figures are out. Over 2 billion was what we spent on the policy. But if you look at the supplies BOST has made so far, in excess of 9 billion, on the surface value of it, we seem to be getting more proceeds, isn't it? Or you have a report contrary to that?
No, on the contrary, the information I'm getting is that there's been some losses that has been observed by the Bank of Ghana. And so we need to ensure that we increase the overall efficiency and reduce the losses. Because normally, in this industry, you face a forest risk. And so the question is that who bears the forest risk? That's very important. And so you cannot just look at the gross figures. You have to do a deeper analysis and find out whether there's actual benefit. And so we intend to commission some work, especially at BOST, to determine the exact volumes, the values, and what we can do in future to forestall such occurrences.
Is there a clear timeline on how long this review will take?
Well, the Minister of Finance has indicated that they want the gold board functioning by March, which means that within this month of August, there's a lot to be done. And so concurrently, we have to pursue these reforms. We also want to reform the entire petroleum value chain, especially the downstream sector, and ensure that we bring it up to speed with modern trends.
The point about integrity and transparency as far as the project is concerned is what has come to the fore. The Auditor General has done some special work on that, on the gold for oil policy, pointing out that there's lack of transparency. PMMC in terms of the offshore accounts, we don't even have one. There are issues about who the private individuals are brokering these deals for us. What notes do you have from the transition period pointing out to some sense of an answer to all of these credibility and integrity questions?
I think you are spot on, and you've brought out the key issues. You don't even get exactly what the companies are doing. Some of them tell you that they take the gold, go and sell it. Who determines the price is another matter. And they take their money, they take their commission and bring the rest back to Bank of Ghana. And they are saying they swap it with oil. The challenge is for it. Can we sell our own gold? Get the forex, give the oil to either BOST or some BDCs to sell. They get the CDs back. And then we get the forex for whoever supplies the oil. and use the CDs that is sold or gotten from the sale of oil to buy some more gold. So that eventually you have a triangle. You sell oil, you buy gold, you get forex, you give the forex to whoever supplies the oil gives you CDs again, so that there's a triangular flow, and then you can have a circular flow and keep repeating it in a recurrent manner. There will be a lag, but eventually, if you get it right, the lag will be evened out.
Are you telling us now tonight that as Energy Minister, you still do not have an idea of the private firm that was running this deal for us? At least there's no offshore account. Are we not able to trace the companies that were doing the supplies or perhaps the purchasing for us?
No, the purchasing is done by Bank of Ghana and PMMC. They do not fall under the Ministry of Energy. It's BOST, which is a trading company, which falls under the Ministry of Energy. But that's what I'm telling you, that from the work we've done so far, just as you are confirming, there's a high level of opacity, and the clarity is not there. And the Auditor General has flagged this. And so it's not just what we are saying. The reality is that we are reforming all this because of the high level of opacity. If it was that clear, if it was that transparent, and you can see everything easily, then you wouldn't even need the reforms we are pursuing. We are pursuing the reforms because of the opacity and the lack of clarity and how difficult it is to get information, even in respect of offshore and all these companies that are dealt with. The criteria for even selecting the companies is not clear-cut. So clearly, there's a problem, and that is why we want to reform that sector.
And since you're pointing out to us that there is lack of transparency, are you going to maintain the Gold for Oil program in the interim?
No, we'll replace it with a better program. The current Gold for Oil program we've inherited, we will discontinue it. Take it from me.
And when you say you're discontinuing that, it will not be run as of tonight?
You need some time to put a workable system in place. If you want to set up a gold board, you have to go to Parliament. It has to have some legal backing. In the interim, we are trying to shape the current system and ensure that we reduce the losses and make it a bit more transparent. But ultimately, we want to replace this whole Gold for Oil program and put in place a much more effective system.
And the question will be obvious. What would be the replacement, knowing that we're struggling with our international financial reserves? Clear questions of what might happen in the future, because you're still running the IMF program, which the government will still continue.
Yes, but the IMF is not against gold purchase. And so if you have one body, which is the gold board, responsible for procuring all the gold domestically, either through agents or in collaboration with the private sector, we hold the gold board responsible. And so based on the tonnage that is bought every year, they would account for all the revenues in a dedicated account, which will be hard currency. And it's that hard currency that will be used to support the import of oil and other essential products. And so it will be very transparent. The year is ended. How much gold have you procured? Maybe 2 tons, 3 tons. How much did it cost? The paperwork is there. Where is that? The Auditor General can audit it. We all know the money that was accrued. How did there's the money? There's a flow. So it makes it more easier and transparent than dealing with multiple people with different standards and different approaches. I think this arrangement is seamless, it's transparent, and I think we should encourage it.
As we speak tonight, do we still have, some strategic reserves or as proceeds from the gold for oil barter trade? In other words, do we have some more fuel that has been purchased by BOST or that BOST has in its stock as a result of this policy?
Yeah, BOST has some stock. The last time I checked, it should take us about 3 weeks, which is not the optimal, but we are still building up. It will take some time to build that up. And so BOST will continue to support the system. But we want BOST to occupy a certain minimum percentage in the market. So the rest will also be done by the private sector. But we work with the private sector to ensure that they keep a certain minimum volume which would also be part of the National Strategic Reserve. And so it's a seamless process, and we're working around the corner. I've just had 1 week today, so there's a lot more work to be done. Sometimes you need a lot of briefing, you need to read all the notes, you need to consult, so that in your bid to do what is right, you don't end up committing mistakes.
I see. Indeed, and we appreciate that fact that you've just been 1 week in office. And it's a good time to hear from you, Dr. Riverson, because you were there today meeting with the Honorable Minister, and you raised some concerns, obviously, from the perspective of the oil marketing companies. What more do you have to say, knowing now, at least we've confirmed from the Minister, that ultimately the gold for oil policy will be replaced?
Yeah, thank you so much, and greetings to you once again, Honorable Minister, and to also your listeners. I believe you and I have heard from the Minister, and we are yet to know what the government is putting in place to replace the existing Good for Oil project, which ideally was supposed to cure two issues. And the first issue has to do with energy security, and second one is energy stability in terms of the economic framework. The question you ask yourself is, were we having issues with supply before the Good for Oil came into being? I believe you know the answer to yourself. But the question about if there's a potential of the Good for Oil to curb the high prices of fuel, I believe the notion that Good for Oil transaction alone will lead to lower fuel prices is a bit of misconception in the long run, because we have seen how this was introduced, and also the fact that absolutely didn't curb energy security in any way, but rather in the latter days of the year, we saw energy in terms of fuel shortage in the country, because the BDCs could not plan along with the Good for Oil fuel supply, and therefore were reluctant in importing. Okay, and then also in terms of the pricing, did Good for Oil bring prices down as we anticipated? The answer is a big no. So we, the industry players, are waiting to hear from the government on what it intends to bring on board to replace the existing framework. And I believe through dialogue, we will be able to bring a better solution.
Is it the case that you don't trust the minister when he says there'll be a replacement? At least the government would have to go with a fiscal option, isn't it? That's what you're used to, the auction of the dollars for you to purchase some more oil for us.
No, I'm not saying I don't trust the minister. Don't please don't misquote me here. I said I believe that work is in progress. I'm just giving you feedback on what transpired throughout the inaction of the Good for Oil project, and the belief for which it was, I would say, implemented. Okay, the minister has rightly said that they are looking at ways to curb the challenges that the Good for Oil program brought. Therefore, they're going to halt it and come up with a better solution. So yes, we prize their expertise, and we believe that through engagement with stakeholders, we want to have fair means of bringing, first of all, a full supply security and also adequate price to the system.
And let's clear this off the table. And fortunately, we understand that the minister has had a long day. So, Honorable Minister, you might want to deal with this issue. So we let go of you. The question about the replacement, the option, that's the concern from the OMC. Okay, we seem to have lost the minister, but that's the point there that you're raising about what the replacement will be. During the time you were running the Gold for Oil system, was it the case that liquidity was never a challenge? What was the experience like for your group? Dr. Riverson, I hope you can hear me.
Yes, I can hear you.
The experience during your time, yes, when you were running the policy, was it the case that cash was never a problem because of the policy?
So I think the issue has not been with paying for the product that was imported under this regime. Okay, um, I believe and I hope that any supplier or every supplier that delivered crude oil products to the country was paid by the Bank of Ghana. I think to an ordinary Ghanaian and to the industry player, what is key has to be, I mean, the mismanagement of a gold resource, which will pose a single risk to the industry. Um, in that really, we're looking at how much gold was sold to purchase that amount of crude oil product that was imported. That's first of all. And was it actually able to solve the problem? That in terms of poor security, in terms of supply, and also bringing the crude oil product prices down. I didn't see that in the market, that due to good for oil, the fuel prices went down. And in terms of transparency, that's where we are. Today, we hear in the grapevine that there have been losses to the Bank of Ghana as far as gold purchases, I mean, to pay for the crude oil products.
Well, the minister has even confirmed that here on the platform, yes.
By Bank of Ghana. And again, you and I as taxpayers will be held accountable to pay for this loss.
Interesting points there, but the ultimate concern should also be about the consumer. Duncan Amoy is with us, and Duncan, you've been listening to the OMCs raise their concerns about the policy, and we're now confirming tonight from the minister that some losses were even made by the central bank. That seems to be a new one. Samuel Bekwe is also with us. He's with the CSOs working in the extractive space. These are all integrity questions that, of course, many were concerned about initially about the policy. So moving forward, now that the government says it wants to find a replacement, what replacement should we be looking for? Samuel Bekwe.
Thank you. I think it's quite clear what the minister has said. We had raised it in the early stages of the introduction of the gold for oil. Particularly, we were very concerned that you have your gold. You can take it to the international market, you sell it, you get your dollars, and then you can use to purchase your fuel if you want. Why did we need a middleman? So the policy, as you say it, has gone through some stages, I would say. It has metamorphosed, I think. In the initial time, they were using middlemen. First, the middleman that was buying the gold, probably, and we heard that it was even at a discount for the gold, selling it, and then he was actually purchasing the oil at a premium. So the same middleman was doing that. We raised a lot of concern. Who selected the middleman? How did we have to have a middleman? At the same time, we noticed that the people who were buying the gold in Ghana here were not PMMC. We noticed that there were some individuals who had received some monies. Initially, the government had informed us that, oh, they were using their own money to kind of finance it, and later we would have paid them. And so we knew that they were buying the gold, not PMMC, as a direct organization. And so those individuals, we don't know how they were selected. We don't know how they made money to purchase the gold. It distorted the bullion chamber, which is those who are supposed to be exporting gold privately. It distorted their business. The policy shut down their business, and most of them were out of business, I think, with the exception of those who had some forward contracts with their suppliers. So we called for, through the EITR report, for instance, we called for transparency on the gold for oil. So today we are kind of vindicated. The objective, did it bring down price, as Dr. Riverson have said? He and I have met many times and spoken about this. Did it bring down the price? No, it didn't. Did it, lead to more access to oil? I don't think the status quo had changed significantly as well. So for me, I agree with the minister, but going forward, if they want to bring their own policy, which is the gold board, which I have worked in Guyana, so I will be presenting to them the Guyana example of the gold board. I think that if they want to do that, they should ensure that transparency is enshrined in the governance structure of the new gold board. Should ensure that there is more transparency.
That's a very striking point you're raising there, because initially The Vice President touted the gold for oil policy as an innovative one. Many would not expect that integrity would be begging the question now. And then this new government says they're working with a gold board. You're still raising issues of transparency. It appears the extractive sector is so shrouded in some way or the other in secrecy.
Let me say that in the previous gold for oil, it has gone through certain phases. I think the current phase that they have now would have been improved phase. Initially, they were using the middleman. My understanding was that they had to do away with the middleman at some point. Now, the Bank of Ghana, through their domestic purchase program, was requiring that everybody who wanted to export gold, they would have a due diligence over you, and then the person deposit the dollar into the Bank of Ghana exchange for you in cedis, which is, I think, the same line that the gold board may toe as well, gold board being the sole purchaser. That there has to be clear in terms of transparency, and very clearly how that will not lead to smuggling as well. If the gold board wants to be the only one to purchase the gold, how would that not lead to smuggling? That is very key. I think it's very, very important. Are they going to do with the private sector? If they are going to do with the private sector, they could work with the private sector and ensure foreign exchange earning, which is what we need to import our fuel. That can be done easily so that you prevent the smuggling, you continue to sustain the private sector business, which is the exporting of gold. But then you oversee every gold that has been exported, and you know how much dollar that gold is bringing in from
learning from the cocoa board experience, gold board, I'm afraid, may go through the same challenges, isn't it?
The cocoa board is slightly different from the gold. So I think there is one of the examples is in Guyana. Guyana has a gold board. It's slightly different from the cocoa board. With the cocoa board experience, they give you money to buy the gold and bring it to them for export. The gold board may be different, even though in Guyana, they don't give you the money, but they buy the gold from you. But they have arrangement with other private sector that they let them also export directly as well. In practice, even though in paper they were supposed to be purchasing and exporting. And so we have to think through, and I know they are doing consultations now, the Gold Board Committee is having consultations, which we will attend on Thursday as well.
I see. Duncan Amwa, the perspective of the consumers and what you're mindful of, the minister at least has confirmed gold for oil, no more. Now it will be the gold board approach. Your concerns?
Truth is, gold for oil, no gold for oil, no different, really. As I speak with you, fuel prices are still rising. And I do think that it is simply because we are just not getting our strategy as a country properly done. It is not for nothing that your first president decided you needed a refinery. Even at the time when the Saltpond oil fields didn't look, as good for commercial production. We were setting up refineries, and the thinking was that at some point we can take ourselves out of the geopolitical demand-supply thing that pushes prices upwards or downwards, so that we can internalize our own factors and be able to sustain our economy so that the pressures of the West, we do not pay for them. Unfortunately, that refinery, per our strategy as a country, we've decided that we don't need to refine. So as it is, blessed, we are now, considering as a country, the most efficient way of importing everything that we consume. And so we may even need to substitute the gold that we should back the currency with for oil. It tells you what a shift we've been on as far as getting our strategy correctly done. Again, in 1993, you decided that you needed, those huge tanks, a strategic storage buffer. What others will refer to as a similar project to the Oklahoma cushioning. Unfortunately, we were able to get the taxpayers' money, money to build BOST, and then it ran for a while, and then we decided that, we cannot even get it to the very reason for which we set it up. And so it runs to a point where now it is also behaving as a market player when it has a very specific core function that it should perform for the country. If you don't reset both, if you don't reset the thermal oil refinery, if you don't internalize your own factors as far as the petroleum downstream is concerned, and the conversation is, let's substitute gold for oil, let's find a way so that the CD or the currency depreciation could be halted. Look, we'll be chasing the whirlwind. These conversations will be had today, will be had next year, will be had, a decade after. We need to revisit what I have almost always referred to as your buffer cushioning. If you decide that you are not going to allow your refinery to contribute significantly to petroleum security, you are simply planning to fail.
I get that.
It is not
and
for
for the
nothing
sake
that
of
others are investing billions.
and for the sake of
a
time,
new refinery.
Yeah, and for the sake of time, so briefly, you don't support the idea of the gold board perhaps helping in stabilizing the fuel prices.
You see, Blessed, the truth is that it would come just like every other government policy that we've seen in the past. It will come with a very beautiful propositioning. But if you don't anchor it on a rather more solid, strategy, you are simply planning to fail. And I'll put this on record. Gold board, gold for oil. We may probably be playing with the semantics. Gold board, not too bad. I mean, from what I have heard, the minister put out there, it probably would be a semblance of a review of gold for oil. But if gold for oil couldn't solve our problem, maybe gold for oil.
Okay.
Not so much.
What we need to do now is to just give 30 seconds to you, Samuel Bekwe, and to you, Dr. Riverson. I'll start off with you, Samuel. Your expectations as you meet on Thursday with the gold board?
We expect that these consultations will generate. The issue is that we need to understand what the challenges are. And as Duncan has mentioned, the challenge is that we don't want to be struggling getting Forex to bring in oil or in terms of powering our energy sector. If the gold, the small-scale gold, could be a solution, how do we ensure that we get more Forex from the gold? We don't have to link it to the oil if necessary. Right. If we can keep it even at the Bank of Ghana, where the bank can give them a very nice auction, then we don't need to link it to the oil.
Dr. Riverson?
Yeah, I mean, thank you so much. I believe we all know where we're going to now. From the strategic point of view, some has alluded to the fact that we need to make sure we have stringent ways of getting the forest sorted out. I believe what I'm preaching is still consistent about other factors that result to the crude oil product prices going up. I mean, one of the things is the city depreciation, and I think that's where the Ministry of Finance needs to look at how to strengthen the city.
All right.
And get it out. And also, we need to define the boss role, like Duncan alluded. Stock reserve for PMS today is low, and I believe instead of what do you call it, best or boss becoming a BDC, I believe their main mandate is to hold stock reserves for national security reasons. And if today the stock of PMS and boss cannot hold it for a week, then that's a problem. In case of any natural occurrences or any war, we are in trouble as a country.
Right.
They are busy trading instead of holding stock for national security, and also putting infrastructure together for fishing and also storage for the country. And I believe this is where we are. Operational inefficiencies also need to be addressed. That could also bring crude oil product prices down.
Okay. Dr. Riverson, I promise you we'll be doing this one more time, but grateful for your time tonight. Also to you, Samuel Bekwe, to you, Duncan Amoah, and to the Energy Minister, Dr. John Abdullahi Jinapor. And for those of you who are on the lookout for what's happening in Parliament, we'll definitely bring you updates here on the Joy News channel. It's been PM Express with me, Blessed Sugan, brought to you by Syntex Tank. It is tough, it is strong, Pepsodent Cavity Fighter, and also Academic Times. Thanks for watching. We'll see you again. Bye-bye.